Nifty. Vikas Khemani, founder of Carnelian Asset Management and Advisors. Vikas, good having you. Thanks so much for joining in. And it was important to have you on the phone as well, just because of the pain that exists in the markets currently, right? I mean, people's portfolios have taken a serious beating the last few days. How are you seeing the texture of the market currently, Vikas?
Hi, Neeraj. Good to be chatting with you. So I think clearly, we had a great, last couple of years. And when you're coming out with that kind of backdrop, it's very natural to have these kind of, intermittent corrections. So they don't really, bother me as much. Of course, nobody likes market going and correcting, but that's the nature of the market. Right now, currently, the setup is because of the current global macros, the way they are playing out. There's a change of leadership happening. There are quite a few implications of those leadership the policy changes from US. Now, how they will pan out, I think market is so when you are sitting at this kind of a reasonably priced, kind of scenario in the market, it's very natural to have this kind of correction. I'm sure the global macros, there will be some clarity, in next sort of 3-4 weeks, or maybe a couple of months. So I would assume that I'm not seeing anything alarming, but for the fact that there could be a good scenario of rupee depreciating. Chinese currency might depreciate given whatever tariff proposals get carried out by the US. The intensity of that depreciation will determine Chinese currency depreciation will determine the US Indian rupee situation. So I think that's the one probably little bit of uncertain environment right now we are in, that how rupee will settle down and thereby impact of that on the inflation. But I'm reasonably sure that this is not going to be disruptive from a long-term India bull story. We might see another, depending on again what's the intensity of that, we might see some bit more correction, or we might kind of consolidate here. Frankly speaking, no answer for that. But I'm not seeing any kind of worrying sign. Any such period of corrections are more as an opportunity than really a big risk.
Guys, point taken. In yesterday's move, though, you saw broader markets crack quite substantially, and while we've seen foreign institutions selling over the last couple of months since August in the benchmarks, or rather in the large caps, in the broader markets, do you think yesterday's move was largely a sentiment breakdown because of the rupee? And do you think that settles, or do you think that earnings coming through might cause people to waver a little bit?
So, Neil, I think it's a combination of 3-4 things. One, I think US yield hardened, in the recent past. The earlier story was that if US yield softens, emerging market will see flows, and which happened, I think, around the first Fed rate cut. But then I think that narrative right now looks like that change, and thereby, and also second one is a little bit of hardening on the crude oil price, which is contributing. So I think this is building the fear in Indian markets about interest rates not likely come down anytime in hurry, including in India. And secondly, probably if the crude price hardens, can this have an implication on the inflation? So right now, I think we're in that a little bit of uncertain, macro environment. And whenever there's uncertainty in the macro environment, it tends to have an impact. And whatever selling we saw, I think it's been coming down, and sometimes it could be a combination of some of the leveraging, unwinding, some of the I think we have seen some actions from SEBI of certain specific players. Some of the unwinding of those positions could be there. So combination of multiple things. The environment is slightly more precarious, and in this kind of environment, it is natural to have these kind of reactions. It does happen. We've seen this movie before. So I'm not like I said, there could be some more pain behind, but I think any amount of correction in the euphoria-built stocks is good. In my opinion, that's where the real value of quality, real value of sustainable earning, real value of less story-driven, more fundamental-driven story comes about. The approach comes about, and in that sense, I'm quite happy that these kind of corrections do from time to time tend to distinguish good players versus bad players.
Vikas, good morning. I like that line. We've seen this story before. We've seen this movie before. I wonder what the end of it is going to be, or the finale. Because right now, I think what people can't figure out is whether today you're seeing, a bit of a relief rally, but all of these negative factors, are they persistent in the system? I mean, look at the first few set of corporate results that have come. Would it be fair to say that that's the biggest worrying factor?
No, so I think, again, probably finale of this movie will be more nifty of 1 lakh, 2 lakh kind of thing in the long term. So that will be the finale. And that finale, there will be intermittent episodes of, these kind of pain points and, violence and as it happens in the movies. So, don't worry about these episodic situations of that. And they will happen, I'm again telling you. Otherwise, there won't be any interest in the movie. You won't enjoy the finale. You won't enjoy the journey. So there would be these kind of situations. And that is where I think also distinguish between hero and villain. So I would say that this correction is nobody likes, if given a situation that everything should go one way up only. But that's not how it happens, right? So I would say that there could be a little bit more pain behind, depending on how macro develops. And I think next 1 month, 1.5 months probably could be, which is what we wrote in our, beginning of the year note, that, this beginning, the first 2-3 months could be a little bit of painful in terms of either time correction or value correction. And hence, it's probably invest in the market with low expectations, invest in the market with a little bit of high risk, take your risk bar high. And that is what I think is playing out. I'm not worried about it from any destabilizing factor, either on the corporate earning or India story or tax collections or macro story, whatever you can look out. I'm really not worried about any of those. That's what I would probably say.
Okay. By the way, HCL Tech is down 8%, so just keep that in mind, viewers, while we're talking about the longer term. Just keep that stock in mind because that stock is really getting a pounding today. Bit surprised at the extent of the correction, but it started off 6 and it's now 8.5. So clearly the market has not liked a couple of things out there. And we'll talk about that in moments after we thank Vikas Khemani. But Vikas, one final question really. With an assumption that your 2025, a lot of your funds will be getting in more capital, would you be tempted to deploy that for the sake of definition, I'm just defining it, in the non-nifty mid-size, small-size companies, because the profit pools of some of these companies seem to be very, very strong even now? Or would you believe that the market would punish valuations at that end, independent of the profit growth, and therefore maybe it might be prudent to look at larger caps currently, despite maybe slower profit growth?
So, Neeraj, I think, we have different strategies and different strategies have different mandates. So we have manufacturing strategy, which is doing well. And so each strategy has, there's a multi-cap strategy. So we kind of stick to the mandate of those strategies. I don't think we might do a little bit intermittent tweaks, but having markets corrected so much, and also some of the individual names correcting 30, 40, 50%, they definitely, I think, more merit if you take long-term perspective to stay invested into that. Again, the point is that what kind of risk do you want to see? Are you seeing the risk of short-term volatility in your portfolio? Then you should be worried about mid-cap and large-cap. But if you're worried about that, there are two other risks, whether it's risk of permanent loss of capital or risk of opportunity loss. If you're worried about those two risks, then I think small and mid-caps are better, where the quality of the management is ensured, quality of the business model is ensured, because those are the ones who will, of course, returns. There's no question on that. So again, it depends on the perspective of the investors. We will continue to stick to our philosophy. We don't think anything is disturbing happening on that. In last couple of months, whatever money we've got, we've deployed only 30-40% because we were kind of expecting a bit of a soft market. So we've been now in this period, we'll be gradually deploying whatever money we've been left. So all our new clients have been sitting on 30-40-50% cash, which we will use this time to deploy. We as an investor love these kind of corrections because it gives us 3 to 5 years a great opportunity which you will never otherwise get or you rarely get.
Thank you so much for that, Vikas. 86.50 on the rupee. I mean, that's one concern perhaps which is weighing down on an HCL Tech also this morning.